Understanding management discussion and analysis, MD&A. Management discussion and analysis, MD&A, serves as a fundamental component of public companies' annual reports and quarterly filings. This section allows a company's management team, often referred to as the C-suite, to articulate their insights regarding the company's financial performance, strategies, challenges, and future outlook. Unlike audited financial statements, the MD&A provides a narrative that includes qualitative and quantitative analyses, helping investors and analysts gauge the company's health and trajectory. Key takeaways. Definition: MD&A is a required section in annual reports or quarterly filings where executives provide insights on the company's operations and future plans. Content areas: it covers compliance, risks, liquidity, capital resources, and upcoming projects or goals. Important note: the MD&A is not audited, meaning the insights and forecasts are based on management's opinion rather than confirmed data. Signaling investor confidence: companies often use this section to reassure investors about the viability of future plans. The role of MD&A. MD&A offers a narrative overview of the financial health of an organization. Management typically discusses financial statements commentary, operational challenges and how they are being tackled, compliance with relevant laws and regulations, future strategic goals and how management plans to achieve them. This segment holds significant value for analysts and investors who seek comprehensive information about a company's operational and financial fundamentals. As mandated by the Securities and Exchange Commission, SEC, and outlined by the Financial Accounting Standards Board, FASB, this section is considered crucial for transparency in public offerings and securities. Regulatory framework and requirements. The MD&A section is an essential part of the 10-K report, which public companies are required to file with the SEC. The SEC requires that companies provide a balanced view in their MD&A, backed by factual evidence, and that they disclose any material challenges they face. This ensures that investors can make informed decisions based on a thorough understanding of the company's potential risks and rewards. Standards governed by FASB. According to FASB guidelines, the MD&A should contain a balanced presentation that encompasses both positive and negative aspects of the company's status. Factual basis for any opinions expressed by management, allowing for analysis that extends beyond numbers. Key content areas in MD&A. Overview and outlook. This section allows management to articulate its vision for the future, explaining significant variances in performance, whether positive or negative. It serves as a foundation for understanding how management anticipates navigating upcoming fiscal periods. Financial health discussion. Details regarding liquidity, solvency, and capital resources are vital elements. Management should highlight long-term commitments and any potential strain on capital, together with plans for addressing these issues. Results of operations. Management can elaborate on their performance results, clarifying any significant changes in revenue and expenses against budgeted expectations. This subsection helps to contextualize financial statements in real-world scenarios, detailing product performance, customer behavior, and market dynamics. Critical accounting judgments. The MD&A section provides management an opportunity to explain the rationale behind key accounting estimates, such as asset valuations. Understanding management's judgment in this area can help analysts assess the robustness of the company's financial statements. Limitations and challenges of MD&A. Despite its importance, the MD&A section is often criticized for its inherent limitations. Subjectivity. The narrative nature of MD&A allows management to potentially misrepresent or overly polish the company's performance, making it harder to quantify its reliability. Vagueness. Management may intentionally keep certain operational strategies vague to protect proprietary information from competitors, which limits transparency. Interpretation issues. Statements made in the MD&A can be highly subjective and may not align accurately with future market conditions, introducing risks that investors must consider. Example: Amazon's MD&A. A look at Amazon's MD&A in its 2021 10-K filing illustrates the typical structure and content of the section. Amazon provided forward-looking statements and insights into its performance, highlighting both revenue sources and operational strategies, while intentionally obscuring details that could provide an advantage to competitors. The section reinforced that financial statements were in compliance with GAAP, and it detailed how specific judgments in the financial statements were made. Importance of MD&A. Understanding MD&A is critical for investors and analysts, as it serves a unique function distinct from more rigid financial data. It allows management to explain unusual events surrounding financial performance, describe future plans and expectations, contributing to investor assurance. Conclusion. In summary, the management discussion and analysis is a key element of a company's financial reporting that not only provides insight into past performance but also sets the stage for future expectations. Through this narrative, management can express their perspectives and strategies, offering a fuller picture of the company's position than what is conveyed through numerical data alone. However, investors must approach MD&A with an understanding of its limitations and the inherent subjective nature of management's commentary. Thus, it is vital for stakeholders to consider the MD&A in conjunction with other financial reports to make informed investment decisions.